Well, the Australian stock market looks like it'll open higher today off the back of some great news coming out of the US on Friday, with the Dow closing up 168 points. Primarily this was driven by data coming out of the Bureau of Labour Statistics, with employment numbers at around about 204,000 for October, better than the market expectation of 120,000. And also we just see US investors looking like they're taking a more risk-on attitude, moving away from bond assets into growth assets, which is the reason behind this recent rally in the US market. Locally, the Reserve Bank of Australia has just reduced its outlook for growth here in Australia. We're looking at around about that 2 to 3% mark. Primarily that's been off a reduction in mining investment of recent times. But nonetheless, benign growth is probably a best case scenario in the current climate. In terms of the banking sector, very topical amongst investors at this stage is, are they overvalued, and how do we value them in the current climate? Well, we've just had international rating agency Fitch come out and say that they give our banks essentially a big tick of approval. Primarily that's been based on the continued profitability of our big four banks. $38 billion between the big four, up 10% from 2012. So we've got quality assets in the banks. We've got a relatively sustainable payout ratio for their dividends, and probably the pick of the bunch has been ANZ with its earnings coming out of Asia. So they've maintained their ratings of AA negative. So all in all, positive news for our banks, a positive week ahead for the Australian stock market. And remember, you can follow us on Facebook and Twitter, or go to our website.